Welcome to this video on Beyond Accuracy. After completing this video, you will be able to explain the importance and calculation of recall, precision and F1 score. In the previous video, you created a confusion matrix, but as you have more labels to classify, the confusion matrix grows. For example, 3 labels like buy, no position, and sell, looks like this. And if your labels are the quantity of shares, which can range from 0 to 10, to buy, then it will be a 11 by 11 table. Thus, as the number of labels grows, it becomes difficult to interpret. Let's look at metrics beyond accuracy and confusion matrix then. Rob analyzed the daily returns of the S&P 500 for the past 40 years. And created an ML algorithm that would be helpful in times of stress or market fall, such as during the outbreak of the COVID-19 pandemic. This ML model will predict when the S&P 500's daily returns will be less than -5%. And based on this prediction, it will give a signal to short, or not to short the S&P 500 futures. This ML model created by Rob showed accuracy of 99.8%. Whoa! He was on cloud 9. But Mary, his friend and colleague, looked suspicious and took a deep dive into the data. The ML algorithm was run on 10,000 days from 1980 to 2021. The ML model was accurate 9,980 times, resulting in an accuracy of 99.8%. She found that the S&P 500 went below 5% only 20 times. And the algorithm predicted on all days including the 20 days to not short S&P 500 futures. On all 20 days where S&P 500 fell by 5%, the model was incorrect. Mary explained the problem to Rob and advised him that there is a better metric to use here. It is to check how many times the model predicted that the market will fall by 5% correctly. In the example, it is 0 out of 20 instances. This is called recall metrics. So Rob was delighted and said, "I will only use recall going forward." Mary had to tell Rob that recall is also not good as a standalone measure. What if the model simply predicts to sell on all days? The recall for the market falling by 5% will be 20 by 20 or 100%, that is correct all the time. But you know this model is not useful. Mary said you should also check the number of times the model gave the sell signal, and it turned out right. Rob realized that this value is 20 out of 10,000 times, which is 0.002. This value is called precision. Rob realized that both recall and precision are equally important. He asked Mary, "Is there a way to create a performance measure that can combine both?" Mary said yes. It is called the F1 score. You can use the F1 score to understand the overall performance of the algorithm. The F1 score is the harmonic mean of precision and recall. And its formula is as shown on screen. Rob quickly calculated the F1 score for his model. It came out to 0.004. The summary of formulas for recall, precision, and F1 score is shown on screen.